Alrighty, what is going on, everybody? Welcome back to another CYPRX video breakdown. In today's video, again, we are in an attempt to educate individuals on current market dynamics, what's really happening behind the scenes, what's actually creating order flow in this market, risk on, risk off market sentiment, really trying to fine tune everybody's investment approach so you all can really tap in. With that being said, if you enjoy these video breakdowns, do us a favor, smash that thumbs up button and subscribe, especially if you saw the previous video breakdown where we had warned in yesterday's video that the potential pullback in risk assets that we're currently seeing today was at the forefront of potentially taking place. So I'm going to show you on today's video breakdown what's going on in the digital asset space, why today there was a risk off market mood, how we warned everybody in yesterday's video breakdown, and again, why you should be paying attention to this information. So I'm going to share my screen with you guys, and I'm going to show you all that on other media coverage platforms in the digital asset space, none are talking about what we are covering here at CYPRX, which is, again, why you should be paying attention. You will not see this information via any mainstream articles or news fundamentals surrounding the digital asset space, telling you guys in detail what's creating order flow, inflow, and out of risk assets. You can see this is Cointelegraph, and this is just their daily update. You can see no articles about why digital assets are pulling back. We can go over to the Daily Huddle, which is another mainstream news catalyst, where you can see no fundamentals actually talking about what's happening behind the scenes via the US data, the US dollar strength, and so on and so forth. It's just a bunch of distractions. We can go to You Today, which a lot of influencers like to utilize as well, right? We can go to FX Street. So all across the board, and this one is funny, right? It says XRP price directionless. No, it's not. Ripple ruling at risk of being thrown out as it faces rejection by 2 federal judges. Here in today's video breakdown, again, I'm going to show you all how at CYPRX, we attempted to warn you guys to show you the directional bias that risk assets like XRP could potentially take, given the fundamentals that were set to come out. So in yesterday's breakdown and in yesterday's market analysis in our private group, here is our entire fundamental breakdown. Again, I type these fundamentals out every single evening during Asia sessions. So that way our private community members have that information before the next trading day so they can adjust, they can react. And again, obviously, of course, it's not financial advice. It's my personal insights into market dynamics. And you can see highlighted in blue right here, I mentioned and discussed and talked about the PMI figures that were set to come out today, where I mentioned that we have the release of the ISM Services PMI, right? To sustain the bullish momentum in risk assets, what we hoped for was to see PMI figures fall below market expectations or previous readings. And I said, however, be prepared for intraday dollar strength if PMI figures unexpectedly expand, triggering a temporary risk-off sentiment. This is again why it is so absolutely crucial for you all to pay attention. Here are some examples from within the CYPRX community of multiple members catching sell positions by adjusting their bias and understanding the whole entire sentiment and the weight that dollar strength would have on risk assets. So just going to show that the people that are paying attention are actually able to adjust their portfolios, understand market direction. When here, you can see mainstream articles telling you all that XRP has no directional bias. So again, let's just go over. And if you look at the timestamp in which I put this information out to you guys, all right, so you can see right here is the market update. You can see 10:51 p.m. yesterday, March 31st. This has 7,000 views. Yet I guarantee you 7,000 people are not paying attention to the information, the value that we're putting out. If we head over to the XRP price action, just looking at the timestamp in which we put this information out to you guys, you can see this green circle was 10 p.m. last night, March 31st, when we put that video out to you guys, warning to you all that if we saw upbeat PMI figures from today, we were most likely going to see a risk-off sentiment and a decline in cryptocurrency assets across the board by understanding these market dynamics. And you can see the vast majority of digital assets across the board have slightly pulled back off their most recent intraday highs. We also see dollar strong above the 105.00 psychological level. You can even go look at Bitcoin as another example. Again, this green circle is when we put this post out to you all, warning of the potential of a deeper retracement on risk assets if we saw upbeated PMI figures. So with that in mind, what took place today? What dynamics shifted hands and what sentiment came out? let's go ahead and let's read through this fundamental overview that, again, we gave to the CYPRX members this morning to update them on current market dynamics and keep them in the loop. If you all have been paying attention to the content that we've been putting out and you are a follower of ours, please do us a favor, smash that thumbs up button and subscribe to the platform. We do greatly appreciate it, and it does help boost the algorithm. Let's get more people educated. Let's get more people involved in valuable information. Again, I just showed you guys 4 mainstream news outlets for crypto, and not one single platform is covering the things that we're talking about here at CYPRX, the things that actually matter. That alone should intrigue you to be interested further in the information that we are providing here at CYPRX. Okay, real valued information via real traders that are not here to prop up anything. We're not here to fluff anything up. We're here to give you guys the real raw information that you need. Okay. So I wrote post US PMI figures. Remember yesterday we were talking about the potential of these figures coming out strong and what impact that could have on the rate cut bets. Again, rate cut bets have been fueling risk assets since pretty much late October 2023, where all across the board, market forecasters, market analysts, and individual market participants are holding on to this narrative that at some point in time in 2024, the Federal Reserve is going to cut interest rates. Last week, we saw Jerome Powell come out, FOMC statement, touting the whole idea surrounding 3 interest rate cuts in 2024. Well, when we see this upbeat data from the U.S. front driving demand for U.S. dollars, showing strength in the U.S. economy, that weighs on that rate cut bet. Okay. So we saw some of that today. Let's read over this. And this will be the ending of this video breakdown, really leaving you guys with this valuable information, because tomorrow we need to adjust. We need to react again, because again, we have more US data to digest. So during yesterday's discussion on fundamental analysis, we highlighted the importance of closely monitoring the PMI figures from the US. And as mentioned, why is this? Because they hold the potential to significantly impact market dynamics. Again, this is reiterating from yesterday's video. We discussed how robust and optimistic performances in these figures, i.e. PMI figures, could trigger a surge in the value of the US dollar, while simultaneously weakening riskier assets, particularly looking at cryptocurrencies. Now, today, what did we witness? We witnessed a sell-off in risk assets primarily attributed to the US dollar index, surging above 104.900, now currently surpassing the 105. This surge was fueled by a stronger than expected United States ISM manufacturing PMI data for March. The manufacturing PMI exceeded expectations, rising to the 50.3 mark from the previous readings of 48.8 and 47.8, respectively, and notably, this marks the first time in 15 months that the US data has climbed above the crucial 50 mark threshold, which is extremely bullish for the dollar, signaling a robust recovery in the manufacturing sector and positive economic outlook. Again, I just showed you all 4 fundamental news websites for the digital asset space, and not one of them shows you this information that we're digesting here for you guys at CYPRX. I cannot stress enough, this stuff is so crucial, yet nobody's paying attention. So this surge in manufacturing activity tends to reduce the demand for risk assets due to several factors. Firstly, it signifies the strengthening in the economy, which may prompt investors to shift towards safer assets, i.e. safe haven of the dollar. Secondly, it suggests no cut in interest rates by the Federal Reserve, as this result will lead to them keeping rates higher for longer to curb inflationary pressures, making riskier assets less attractive in comparison. Right? Remember, we reiterated in previous video breakdowns why risk assets have been so bullish and to be careful in case that dynamic shifts hands. We are not here talking about some doomsday scenario, saying that risk assets are going to sell off and your whole entire portfolio is going to crash. No, we are logically educating individuals on why these risk assets are flipping bullish and bearish on an intraday perspective. And again, showing you guys how in our private community, people are benefiting from this information. So if you want to benefit from it as well, again, obviously, of course, it's not financial advice, but it is actual education on how these markets work. Okay. Moving forward, investors must remain vigilant and adapt, because at any given point in time, we could still be in a bullish environment, and this could just be a retracement down into discounted prices for market makers or market participants to better readjust themselves at discounted areas of interest. Okay. Adapt to the evolving market conditions. Tomorrow, our focus will be on JOLTS job openings and factory orders on the U.S. data front, along with various speeches by Federal Reserve members. Now, To see a reversal in this current downtrend of risk assets, it would be crucial for US data to underperform expectations, accompanied by a dovish sentiment from Federal Reserve speakers. That would be the ideal scenario for us to see a recovery in risk assets tomorrow. Would for us to see dollar pull back off of its intraday highs, for us to see downbeat data, and for us to see that accompanied by dovish Fed speakers. However, given today's positive US data, it is prudent to be prepared for a potential hawkish tone from the Federal Reserve speakers tomorrow. How such a tone, obviously, of course, understanding this would likely reinforce the narrative of a reduced likelihood of rate cuts, thereby further strengthening the dollar and potentially causing a continued decline or intraday weakness in risk assets. Therefore, it is essential for investors to remain flexible and responsive to any shifts in market sentiment. Okay, I cannot stress enough. We've been trying and attempting to show you guys how important and how crucial this is. And if you've been tapped into the information that we're providing here at CYPRX, again, key, ahead of the curve. We try to put this information out to you guys in advance. So make sure that you're following us on X. Make sure that you're following us on YouTube. Do us a favor, smash that thumbs up button so that way it gets pushed out to more individuals like yourselves who are actually interested in curbing their education and not paying attention to this bullcrap mainstream garbage that literally tells you to your face as a manual retail investor. Look at this. Look, you can go and pay for this subscription, right? And they're telling you garbage. They're telling you that XRP is directionless. When here at CYPRX yesterday at 10 p.m., 7,000 people, we warned everybody that the changing dynamics and strength in the United States dollar followed with and coupled with stronger US data would most likely result in weakness in risk assets. And you can physically see where we put that information out to you guys, the result that took place after the data came out, and showing you all that no mainstream media coverage is taking place on these topics. Wow, it's absolutely mind-blowing that this is what people would rather pay attention to instead of the valued information that we put out in the private community. So again, as always, give you guys the realest insights. It's absolutely mind-boggling what's taking place amongst manual retail investors, where their attention lies, and it's just crazy to see. So again, if you guys enjoyed this video breakdown, keeping you on the loop with why your portfolio is most likely in the red today, do us a favor, smash that thumbs up button and subscribe. Make sure that you are paying attention for any further insights. Remember, tomorrow our focus is on that next US data front, Federal Reserve speakers, and the sentiment and tone that could potentially take place. Ideal scenario is we want to see that dovish sentiment from Federal Reserve speakers holding on and pumping into the market that rate cut narrative. If that sentiment changes hands, we're most likely going to see a further pullback in risk assets. Here at CYPRX, obviously, of course, zooming out, the macro for cryptocurrency assets as a whole, in our personal opinion, long-term is bullish. So we will be capitalizing on any discounted opportunities in the digital asset space that we get. As always, be cognizant, be aware out there. I cannot stress enough, pay attention, please, to the information that you are soaking up. We're going to continuously attempt to try and provide you guys the realest info behind the scenes, covering things that these mainstream fundamentals are not covering for you all. I will see you all in the next video breakdown.